Hello and good morning. My name is Jake Adams and welcome to Tax Savings Team. Tax Savings Team is a community of tax professionals, enrolled agents, CPAs that are focused on providing their clients amazing value through tax strategy. These simple and easy to use tax strategies, what I call the core four, are going to allow you to charge your clients more with more perceived value and allow you to build the practice of your dreams, the tax practice of your dreams. So I've got a very important question for you this morning. And the question is where do medical expenses go on Form 1040? Now you might be asking yourself, this might be a trick question, but here's the answer for you. So traditionally, we know that medical expenses go on Schedule A of the 1040, all right? Well, what happens with the Schedule A is you have the floor. Right? Now that floor has been bouncing around between 7.5% and 10%, but let's just say 10% of AGI. Right? So that means you can't even start taking medical expenses on the Schedule A till you get the 10% floor. So what is the best way around that? What's the best way to make sure that we are providing the best service to our clients through tax savings and tax strategy? Well, the answer is the Section 105 Medical Expense Reimbursement Plan, which is the Merck, or the HRA, which is a health reimbursement arrangement. Now, there's many different ways that this comes into shape and form. In the simplest way, if we have a husband and wife, spouse, working as an employee of the business, it creates employee benefits. Now, if you have other employees and then you start getting into some of the rules and the technicalities of the Affordable Care Act and things like that, you want to go through a separate service. And I'll have all the links and information to go through a separate service for a QSARA plan or something like that. But if we're looking at just the basic, the easiest husband and wife, spouse, employee relationship, that's what we're going to be looking at today as a way of creating amazing and huge tax savings. So going back, we said the medical expenses on the Schedule A are limited to 10%. So how do we get around that? The Section 105 Merck plan allows us to put them here under employee benefits. Now, how does this work? Well, essentially, it's saying, well, the spouse is an employee of the business, and as your spouse is the employee of the business, they can earn employee benefits. So instead of paying them a wage, you're giving them these medical expense reimbursement plan or these benefits, employee benefits, in lieu of payment, right? So that means you don't even have to run a W-2. You don't have to have any wages or anything like that. And the payments for the services provided by the spouse in the business then run under employee benefits. Now, what's the benefit of having it here under Schedule C instead of Schedule A? Well, here there's no floor, no limitation, and you also have the self-employment tax. Of 15% deduction that you're going to get by having it here in the Schedule C versus the Schedule A. So where do medical expenses go on the 1040? Boom, using the Merck and the HRA. It's amazing stuff because you're going to save the self-employment taxes and there's no Schedule A limitation, the 10% floor on your medical expenses. Now you might ask me, what kind of things are covered? What do I have to do form-wise? All the forms are on the website. You can get all those on taxsavingsteam.com. All the forms are there and all the walkthroughs are there. But basically what I want to do is kind of walk you through kind of how this would work in practice, right? So let's say you have Bob. There's Bob. Hey, Bob. And Bob has a right? So Bob is a consultant. And Bob's wife, Mary. Wife, spouse, Mary. There's Mary. Oh, Mary's got a very long neck. All right, and there's Mary. So Mary helps Bob in his business. Mary does accounting, bookkeeping, maybe some marketing, maybe talks with clients, things like that. So Mary gets compensation, right? So Bob can pay Mary a wage or a salary, or you can provide these medical expense reimbursements. These things do not cover the self-employment health-related expenses, or the self-employment health insurance, but it does cover all your out-of-pockets. Things like chiropractors, co-pays, prescription drugs. The whole list is on the website. Make sure to go and download that list. It's a 1.5-page sheet with everything from x-rays to dental visits and orthodontics and LASIK for your eyes. It's got tons and tons of stuff. So basically you're getting a tax deduction for all of those medical expenses, right? So Bob is going to pay Mary, his wife. What is he going to do? How's he going to pay her? Not with cash, not with a W-2, not with a check, but with these medical expense reimbursements. So in that case, Bob can actually pay those expenses directly, or he can write Mary a check for her medical expenses, right? This is the simplest and easiest way with a husband and wife or a spouse that's helping out inside the business. Remember, if you have employees, it becomes more difficult, especially with the new Affordable Care Act and all the technicalities around that. So you definitely want to go through a company. I recommend two to look at: Task, TASC, and Base, BASE.com. I'll put all those in the links down at the bottom. So make sure you check out taxsavingsteam.com and make sure that you download these, learn about these, share these with your clients. But remember, when you're sharing these with your clients, make sure that you're focused on the most important thing, and that is providing value to your clients. Don't just tell them about it, help them implement it. And by helping them implement it, make sure to charge what you're worth. Make sure to package this around an entire tax strategy plan so that you can provide the full value to your client that they are really looking for in you as their tax professional. This is Jake Adams from Tax Savings Team. Thank you so much.